All right, how's it going, everyone? It's about that time again for us to talk about this upcoming week's earnings, and we'll also do a quick recap of last week's earnings as well. And as a quick refresher, earnings is when a company gives us an insight of their past 90 days, the performance, their business operations, and how their financials are doing. So it's probably in your best interest to stay up to date, especially if a company that you are invested in is reporting their earnings for this week, right? And for the production quality of this series, I'm going to be completely transparent with you. It's not like my other content. It's going to be a lot more chill. You could just imagine it as like two dudes hanging out. Just you and me. We down an entire box of pizza together, and then we decide to go on a little, nature walk, a little hike in the woods, and we're just going to be talking about stocks. Except the path is going to be narrow, so you walk ahead of me, and I'm right behind you, and it comes to find out you're lactose intolerant. So you pass gas the entire time as we talk about our favorite stocks. But anyways, without further ado, let's go ahead and talk about last week's big heavy hitters. The first one I want to circle back and talk about is Target Corporation. This is a discretionary spending retail giant that's it's having a rough 5 years because just on the share price appreciation alone, they're down by negative 35%. However, that's what happened in the past. As an investor of stocks, you should be forward looking what's going to happen in the next 3 months, in the next one fiscal year, or the next 10 to 20 years. Anyways, taking that into account, their earnings for the past 90 days was just absolutely beautiful. They smashed through the Wall Street expectations, and their guidance for the rest of this year, in the face of tariffs and a lot of uncertainty, it's intact. However, even though it's intact, it's still a slight decline year over year. So the numbers are going to be going down. However, they're not saying that it's going to get any worse. Also, during the earnings call, it caught me by surprise, and alongside with all the other analysts that were tuning in, they decided to do a change of command for their CEO. So I think his name is like Brian Cornell or something like that. He's been with the company for a really long time. And obviously under his leadership, Target has just been suffering, right? Because they've been flip-flopping on the political aisle, which I do not think is a good business take. But anyways, that's the past. So going forward, the COO is going to be taking over. Except the catch is, he's been with the company for about 2 decades. So between you and me, a guy that's been with the same company for the past, almost 20 years, I don't think he's going to be able to think outside of the box and save Target and steer the ship and reverse any damage that's been already done. I know that might sound a little harsh, but having been a part of corporate America before, the people who've been there for like 20 or 30 years at the exact same company, the way that they think, their perspective, and the way that they talk is so ingrained into that company's culture and DNA that they're not able to bring any more diverse ideas to the table. At least that's been my experience. But who knows? Maybe this dude will make Target relevant again. But anyways, in terms of like their business operations, about half of their merchandise for Target right now, it's made in China. So they did give us line of sight that the tariffs are hurting and are hitting them pretty darn hard. They're also increasing their prices across the board to make up for the cost of goods sold. So right now you're taking a look at the revenue, right? This is the top line. So they're generating, let's break it down on a quarterly basis. So every 90 days. So they're generating $25 billion in 90 days. However, the cost to do that and to make that money was $17.9 billion. So that's the cost of goods sold. So in order to improve and increase their margins, they're going to increase the prices of what they're selling. So let's say they're selling a pair of socks for about $1. For them to have it manufactured, the overhead cost to have it shipped to America to be sold here, let's say the cost of goods sold is like 50 cents. That means their gross profit is 50 cents. So what they're going to do is increase the price of those socks to like $2. That way, their gross profit is going to be $1.50. Hopefully that makes sense. And they also spoke of, I think it's a very uncomfortable topic for the Target leadership team to ever address or to answer questions about, but they did mention that the ongoing Target boycott is not doing them any favors. They're trying to win back those customers that are like, I'm never going back to a Target. So that's the current update with Target. And then another retail giant that posted their earnings last week is Walmart. Take a look at how they're doing. So year to date, up by 7%. I thought they would be doing a lot better than that. Past 1 year, 28%. So it looks a little bit better. And in terms of their earnings, well, it was a mixed bag. Obviously, as you can see on your screen right now, their revenue for the past 90 days, $177 billion. But something that you have to realize about Walmart is that they have razor thin margins. So if you scroll all the way down and look at their net income, even though they generated $177 billion, their profits, their bottom line is $7 billion. So as you can see, right, the cost to do business as Walmart, it's kind of hard. And in terms of like their numbers, they missed the expectations for their bottom line, their earnings per share, but they beat on their revenue expectations. So that's what I mean by it was a mixed bag. And the reason why they missed their earnings is because their profitability has taken a hit from tariffs, just like Target. And the leadership team, I don't know if this is a good or a bad thing, but it is what it is, right? Don't shoot the messenger. They insisted that they're not going to raise their prices across the board, right? They said they're only going to raise the prices in select categories in which it makes sense. And because of that language, after they posted their earnings, they just went off a cliff. Because I think something that you have to realize is like with Wall Street and the analysts and the hedge funds that are tuning into these earnings calls, they want to hear that you're going to optimize and squeeze every penny out of the consumer. If you go against that direction, the financial markets punish you. And I think that's kind of short-sighted. Now, I could absolutely be wrong, because if you're familiar with this channel and you're a friend of the channel, then you know some of my takes are absolutely wonky and the logic is not all there. But what I think is if Walmart continues to give the best pricing against the competition, then I think a lot of consumers are going to gravitate towards Walmart again and again. So they might not win in terms of the margins, but they're going to win in terms of the quantity of customers that are repeating their shopping habits at Walmart again and again. Does that make sense? So the fact that they went on a sell-off like this, I think it was overblown, and it was absolutely emotional based on big money. Because I'm sure small money, which is retail investors and amateurs like you and me, I honestly think this could have been a buying opportunity, but I reserve saying that because their trading multiple is still at 36. So their trading multiple is basically, I don't know, let me think of another like tech company, right? Like Google, Mag 7. Their trading multiple is a 20.7. So for Walmart to be trading at this type of premium, even if they went on that kind of sell-off, for me, I don't think it was a buying opportunity. So for me, I decided not to buy into them, right? Because I feel like with a retailer like Walmart to be trading with a PE of 36, it just doesn't make sense. However, let's talk about some of the good news with Walmart in case you are an investor of them, or if you just want to know what's going on. Their e-commerce sales were up by 26% year over year, and their advertising sales were up by 46% year over year. They're copying the Amazon playbook, pound for pound, because Amazon selling those ads and those sponsored listings, they make so much money and the margins are super good. So Walmart's doing the exact same thing for their websites, and they're selling ads on the TVs that are on display in their stores as well. So I think that's pretty genius between you and me. And as of May 2025, their e-commerce fulfillment centers are now profitable. Because for the past 15, maybe 16 years, Walmart e-commerce. So whenever you order something on Walmart.com, they were running at a loss. They were operating at a loss, but because they had a competitor that did the exact same thing and now they're turning a profit in Amazon, Walmart was like, you know what? Let's keep doing it. Let's keep doing it. And now, if you order something from Walmart.com, they're actually making a profit from having that fulfilled and delivered to your doorsteps. So I thought that was kind of cool. And going forward, I feel like even if you're not invested into Walmart or you don't care about them, for me, for instance, I don't really care about them. I'm not invested into them. But the reason why I tune in and I pay attention to how the markets react to Walmart is because Walmart is responsible for about 10% of all US retail spending. So when you think about almost 1 out of 10 things being sold in the US to a consumer, it's done through a Walmart. That's a mind-blowing statistic, right? So it provides a pretty good gut check into the American consumer spending habits. You get to quickly see whether or not the consumers are struggling, or if they're thriving, or if they're happy to spend their money. And if you look at it broken down on a quarterly basis, I know there's a lot of fear and speculation. People saying, oh my gosh, the economy is slowing down. People are not eating out as much. People are not buying things. I would say the data begs to differ. I think right now we're looking at the gross sales with all their categories baked in. Maybe if we break it down to just their grocery and their retail business. Yeah, so the groceries are up by 6.7%. Let's see, home and apparel up by 26%, health and wellness up by 15%. So as you can see, I think the consumer spending, it looks business as usual, right? So I don't know, I think that's pretty interesting. And unlike Target, right, Walmart, they've been diversifying their manufacturing and their procurement for the past like 3 or 4 years, I want to say. So instead of having 50% of their stuff imported from China, they actually bring a lot of their stuff from Mexico, Canada, Vietnam, and India. And in terms of China, only about 30%, sometimes it's as high as like 35% of their products are imported from China. So it's just something to keep in mind. And I like to scroll on social media to kind of get a gauge of what the consumers are, hyping up. Like not too long ago, so many people, especially like nurses and teachers and college students, they were hyping up and obsessed with the Stanley water containers or whatever. And now nobody cares about the Stanley water containers now, right? However, along that same territory right now, guess what shoes are trending? It's not Nikes. It's not Adidas. The shoes that are trending on social media, especially on TikTok and on Instagram, it's Avia, which are the New Balance knockoffs that are sold in Walmart. And it's like $20. It looks and feels just like the New Balances, but if you look at the reviews and the comments, people are like, yeah, my feet hurt when I wear them for too long. So they might look the part, but they don't have the quality of like a good shoe with quality foam. I don't know, just something that's interesting, that their fashion department, their clothes and their shoes are trending. And I feel like that's market share that they're taking away from Target. Because I remember when I was in college back in 2010, dude, I used to buy my clothes from Target. Like Target was the go-to place for most guys around my age, right? Now I just feel like Target, I don't know, man, Target just needs a rehaul. I'm not even trying to be too harsh, but like they need to bring in external people to the company that had success elsewhere. So like bring in someone that was like an executive vice president at Amazon that made the in-house label clothes for Amazon, right? Or someone from Walmart or someone from, I don't know, like H&M or Gap. Because Target right now, dude, I don't know. Let's just move on. I don't want to offend too many people. Let's see. The next one that I want to circle back on is TJ Maxx. They also reported their earnings. And if you don't know who TJ Maxx is, it's basically a retail store where you can buy past seasonal goods that are name brand. So stuff that was really hot and popular 3 or 5 or 10 years ago at a fraction of the cost. And I would argue it's the place to go to if you need to buy underwear for a guy. I'm not kidding you. That's usually where I go to buy socks and underwear when I used to live in the States. But now, dude, I don't know if it's because I'm getting old, but I buy most of my clothes from Costco or Sam's Club. But if you need to get some good workout underwear, like those spandex material stuff, you go to a TJ Maxx or Marshall's. Also the parent company of Home Goods and Marshall's. So that's why I'm saying those names as well. And in terms of their earnings, as you could see, past 5 days, they went on this huge spike. Prior to their earnings, they were like, what? Roughly 132. And at the height of their earnings, they were at 143. So they basically went up by like $10. And that's because they blew their earnings right out of the water. They beat, let's break it down on a quarterly basis, up by 6.9% for their revenue. And for their EPS, which is the earnings per share, the profits per share, up by 14.5%. So they're doing pretty good as a business operation. They beat on the EPS and the top line for the expectations. And catch this, a company that is selling clothes, right? Clothes, I guess some people can argue that's a necessary ingredient for survival, but I feel like for me, I would categorize retail clothes as consumer discretionary, meaning it's not a necessity, but it's a want, not a need. Now, if the consumers were struggling, like the news and the media want us to believe so, I don't think that TJ Maxx would be thriving right now. Correct? It's just my takeaway, right? My opinion, my commentary. Case in point, TJ Maxx raised their guidance for the rest of the year. They're bullish right now, which means discretionary spending is not slowing down at all. So I know there's people out here that are all in cash right now. They're like, dude, we're in a recession. Their economy is cooked. You guys are delusional. But the data begs to differ. Obviously, from my tone and the way that I think you could categorize me and define me as a bull. I'm pretty bullish about the stock market right now. And that's why, like, back in April, when there was that unwarranted sell-off of all the big name companies, I hope you guys made money. I hope you guys invested and you're up in the green by 40, 50, 60, 80%. Like, I saw that as a buying opportunity because I did not for 1 second believe the narrative that we were cooked as a society and as a civilization. The one thing about the American economy is that we always recover and we're always up to new highs. It's just the way that it's been for the past 200, 300 years. So, I don't know. Obviously, we have years where it's a downturn, where it's a bear market, but I do not believe for 1 second that we are in a recession. That's just my take. Obviously, I could be wrong, but it is what it is. But on the flip side of TJ Maxx thriving and doing so well right now, it could also imply that shoppers are hunting for brand new stuff on a discount rather than buying it at full price. So I guess it could show that the consumers are hunting for sales, deals, and discounts more so than before. But I feel like that's always been the case, right? Human psychology and marketing knows that people love sales. I don't know about you, but there's not many things that I buy for at full sticker price, unless we're talking about groceries. Like anything else that's a big ticket item, like a laptop. By the way, my goodness gracious, I was gonna buy a new bicycle, but I had to put that on the back burner because the baby is coming in about a month and a half. And right now we're making the decision to possibly get a second car. That way I don't haul the baby around with my bicycle. Because I feel like I kind of want to do that, but I know it's not safe. Right? Some of the drivers out here are absolutely crazy. Yes, Japanese drivers, they can be a little crazy at times. And I just don't know if I want to put that risk to my daughter. And so consequently, we're on the market right now to buy a used car, which is kind of crazy because instead of buying the bicycle about like 2 months ago, I was shopping for a new computer because the one that I'm using is about 5 years old, and I push it to its maximum output and its full capacity workload every single day, right? Like computer editing, video editing, the stuff that I'd use it for, my computer is on its last leg. So it kind of stinks, but I am going to prioritize my daughter. So we'll get the second car, and then after that, hopefully there's no other big purchase items we need to do because I plan on buying a laptop after that. I truly need to replace this laptop. But anyways, I don't think you guys care about that. So now let's go ahead and talk about the road ahead. So what you see on your screen right now is the road ahead. And there are some pretty big names as evidenced by big tech, Marvell, Snowflake, and Nvidia. I'm going to tell you this right now. Wednesday, every single butthole on Wall Street is going to be sweaty because I think the economy and the whole AI movement is going to be contingent upon Nvidia saying very bullish things. If for one reason or another, Nvidia says anything that might scare the investors and the markets, every single industry that supports the whole AI movement, including HVAC, utilities, and other semiconductor chip companies, and the equipment manufacturers like Lam Research, ASML, they're all going to go on a sell-off. You can quote me on that. That's how important and influential Nvidia is going to be on Wednesday. And then, of course, we're also going to continue the retail stress test. But between you and me, we just talked about it. So based on Walmart and Target just crushing it last week, I think all of the other retail names are going to do just fine, including Five Below, Dollar General, Best Buy, Gap, Ulta Beauty, and you see anything else? Oh, Burlington. They're just like TJ Maxx and Ross. And of course, Dick's Sporting Goods. So now let's go ahead and dive a little deeper into each day and look at the companies that are reporting. So to kick things off on Monday, I don't really think there's anything too important here. I mean, obviously there's Wolfspeed, which this company, wild. You want to take a look at this? They're up by 218% since their IPO in June 30th. And I believe that Wolfspeed is a part of the semiconductor space. So to be up by, like 200% in a matter of like weeks, it's pretty impressive. However, do keep in mind, it's a penny stock. It's $1.30. They're not profitable. Their earnings per share, their bottom line per share is a negative $8 per share. So between you and me, I'm not interested. So let's jump on over back to the earnings calendar and jump over to Tuesday to see if there's anything else. Looks like we have the Canadian banks that are reporting up there, the Bank of Montreal, the Bank of Nova Scotia. By the way, speaking of Bank of Montreal, I don't really know too much about Canadian banks, but what I do know is that they're the sponsor of Los Angeles FC. And it's not a team that I support, because obviously I'm a Seattle Sounders fan, but Son Heung-min is now a part of the LAFC team, and they're sponsored by BMO. So that's, I don't know, I guess that's a dumb little call out. Kind of interesting, though. And then, let's see, there's a software company right there, Mongo. Anything else that's kind of wild? Oh, there's Ehang, the Chinese equivalent of the drone manufacturers like Joby Aviation and Archer. They're doing the exact same thing. So if you're bullish on the whole drone space, Ehang is one to look at. And actually, I want to circle back to Mongo. I feel like I've heard about this company so many times, but I don't necessarily know what it is that they do. General purpose database platform worldwide. So you're going to have to put me on. If you work in IT or if you're familiar with a MongoDB, what exactly do they do? They're down by negative 6% year to date. My gosh, this company has been struggling. Past 5 years, they're up by 1%. What do they do? Well, I guess I'm not too interested at this point because, I mean, their revenue looks pretty darn hot, but they're not profitable. You know the policy. This channel, you take a look at the past 10 years, they have yet to, the past 10 years, they have yet to turn a profitable quarter. Well, they're getting there. I guess based on this trend right here, potentially in the next year, year and a half, they should be profitable, but Me, I just need the company to be profitable. I've been burned too many times in the past by investing into companies that were operating at a loss and burning through cash. That it just, I'm not trying to exaggerate and say that it gave me PTSD, but like, it just gave me that spider senses to be like, if a company is negative in their free cash flow and their bottom line is negative, I just don't want to go near them. Can you blame me for that? It's because I've been burned too much. And then Wednesday, eventually one day I am going to make a video about the lessons that I learned by investing into XYZ, various companies that eventually went bankrupt or their valuation dropped by like 90 or 95%. I will make that video one day because I think people will be able to learn from my mistakes. And then of course, Nvidia. Let's, oh my gosh, this is just a phenomenal company. I mean, to be up by 406,000% in about, 26 years, that's just absolutely ridiculous. And huge kudos to anybody and everybody out there that bought the dip back in April. I bought the dip too. I think I bought like $1,000, $2,000 worth of Nvidia back in April, and I sold them when they hit 150. I did not expect them to get to 177. But do I regret selling them too soon? Not really, because I still made a huge profit. So for anyone else that did buy the dip into Nvidia at about, what is that, like $90 a share? Congratulations. Hopefully you held on to your shares. I did not. Let's take a look at how they're doing right now. Yeah, these are just absolutely monster numbers. Just so freaking impressive. Speaking of which, I want to I know AMD is not reporting, but I kind of want to see how they're doing. Yeah, they're also just crushing it. And unlike Wolfspeed and some of the other companies that are operating in the AI space, see, AMD, they're profitable. And I say that by looking at their EPS, which is the bottom line per share. It's in the positive. Same with Nvidia. And that's why, why invest into an unprofitable company when there's competition and peers and rivals that do practically the same thing, or they're in the same territory, and they are profitable? So why not just go with the profitable company? Obviously, that's not financial advice, but this just, I don't know. Why go with the unprofitable choice? It's just my cup of tea. Like, if you were a potential entrepreneur and you're thinking about buying a business or starting a business, or I guess buying a business, not starting, would you really want to buy a business that's unprofitable, that's burning through cash, that's surviving on loans? Probably not, right? So why not apply that same kind of logic and perspective to potential investment stocks? Because when you buy a stock, you are a share owner. You're a part owner of that company. So don't you want to know that your business operation is profitable and it turns, that it has a positive margin? I don't know. I guess I'll just stop talking about that. I might trigger some people. Oh, there goes my dogs. Okie dokie. So where were we? The wife came home unexpectedly for her lunch, and I was like, oh, hey, how's it going? So now I'm back to filming an hour and a half later. So I guess the next stock that I want to talk about, oh yeah, so we're on Wednesday. Snowflake is also reporting to Snowflake. This is one of my bigger regrets, I guess, in the stock market. I was monitoring them in the latter half of 2024 as I was watching them go on this massive sell-off, and I was like, dude, I feel like this is a good opportunity to buy into them. But I did not. I did not buy into them because even now, I still don't inherently understand what it is that they do. All I know is that Snowflake is an integral part of the cloud. But as a YouTuber, I have no idea what the heck that's supposed to mean. However, based on the financials alone, I should have just bought into them. Right? They're unprofitable. I think that was another red flag. I was like, dude, they're unprofitable. So I didn't understand their business model 100%, but also they're unprofitable. But does it even matter? Because if I just bought them at like $100 a share and they're currently just shy of $200 a share, I would have doubled my money. But they're also reporting and whatever. Dude, Trip.com Hotels.com, Booking. I don't trust any of them. Why? I truly believe that their economic moat is eroding because Google has it integrated into their search engine now for you to be able to book flights, hotels, whatever it is that you need on Google. And I think Microsoft Bing is copying them as well. So their days are, I don't know, maybe I'm a big bear for the whole online hotel and flight booking space, but I just don't believe in their economic moat. Plus, I feel like a lot of consumers, including myself, I would rather just go to like deltaairlines.com or southwestairlines.com and book it directly on their website rather than just booking it through Google Flights. JM Smucker, Five Below. You know, to be honest with you, besides Nvidia, this is a pretty quiet earnings week. I don't think it's too crazy. There's another Canadian bank, so it seems like every single Canadian bank is reporting. This one I'm going to be monitoring. Marvell has been on my watch list for about 4 months now, since April, and I was thinking about buying into them, but I didn't, and I've just been watching them slowly, right? And I think their latest big headline is that they're making custom chips for Microsoft, but I feel like out of the whole AI semiconductor chip players, including AMD, Nvidia, and Broadcom, I think Marvell is the pound for pound most undervalued out of the bunch. But having said that, as you can see by right there, their current earnings per share is quite negative. So yeah, they're unprofitable. The last time this company turned a profit in their operations was 2020, when they generated $2.38 of profits per share outstanding. Now they're negative 57 cents, so I'm like, unprofitable on paper, but let's see if they're actually generating free cash flow. Yeah, they're flush in cash, 1.3 billion. So it's just an accounting measurement that they're unprofitable. Must be like a tax write-off or line item, a write-down, something must have happened. But anyways, with Marvell, now me personally, I think I do have some buy orders in place for Marvell. I think to trigger at about like $65 or under. Will it reach that point? I don't know, but hopefully I can buy into them. If not, dude, I'm not going to be upset. It's not like I'm begging or desperate to buy into them. Because I think out of the big four, I do think Nvidia is number one. AMD a close second, and Broadcom a distant third. Marvell is definitely in fourth place. So it's not like I really need to buy into them. But if I can, it would be pretty nice. And then I want to circle back on Dollar General. I think at the end of last year, zoom out and take a look at this. They were on a massive sell-off, right? They were like 125, and then going into December, they had a little rally, and then they went on a sell-off. And then I made a video about them about around this point right here, when they were like $75 a share. And I think my conclusion at the time, I mean, I'll show you their financials. Looks phenomenal. They cater towards rural America because even Walmart and Target, they don't operate in rural America. So I was like, okay, they have a pretty good niche and a target demographic with little to no competition. Like, I get it, but I don't know. I think at the time I was like, I just don't know if I believe in their turnaround story. And lo and behold, they went from $75 to now $112 a share. So I think it just goes to show that if a company is high quality in nature, even if they do have like a setback, a storm, or they steer off course a little bit, I'm talking about Target here, I think, eventually, with enough time, they will bounce back and they'll be back to all-time highs. So Dollar General, I don't regret not buying into them, but it is quite magnificent and nice to see them recover. I'm actually happy for Dollar General and anyone else that bought into them. Like, I'm happy for you guys. Oh, there's also Hormel that's reporting. I barely have, I think maybe 1 or 2 shares of Hormel. I think depending on how good or bad their earnings goes, I might just sell out of them because at this point it's like, what's the point of holding, 1 or 2 shares of a company? I'm trying to trim down any of the holdings in my personal portfolio where it's just like, all right, I'm in the green by like 20, 30, 40%, and I only have one share. I might as well just sell it. Because very soon, I'm still hashing out the details. Very soon, I'm going to be launching the whole portfolio reveal and weekly series surrounding what I do with my portfolio. So I'm pretty excited about that because you guys can see the tangible results of what happens if you apply value investing, dividend growth investing, and buying a stock near their 1-year low of a high quality company. Like, what is the output, the consequences of doing that style for the past like 5, 6, 7 years? So you guys will see the good and the bad soon. Not yet. Soon. I do have a lot of like projects that I'm trying to film, edit, and upload before the baby is born. Because I'm trying to launch those weekly series near her birth because I want it to be a reoccurring series, kind of like a Netflix show where it's like once a week. Not much editing, but I will speak a lot on the logic behind the holdings and the future moves. So it'll be kind of like similar to this style right here. Yeah. Oh, there's Alibaba. Dude, Alibaba's reporting. Interest and Chagee. Dude, this is a Chinese milk tea company, and they're just absolutely crushing it. I believe they just IPO'd, and as you can see, they're down by negative 16% since their IPO. Their trading multiple is 11, but check this out. We're going to jump on over to their income statement. Their top line, their revenue is growing at an astronomical rate. But the reason why I hesitate, the reason why I'm not buying into them, even though a lot of people seem to be very bullish about them, is that they do not have an economic moat. There's so many different Chinese, Taiwanese, Japanese, Korean milk tea chains. I just don't see them being the best of the best. I definitely think they have like a premium luxury feel and atmosphere to their little milk tea shops. When I spent some time in New York City, dude, there was no shortage of all the various and different Chinese milk tea shops. There's so many on every corner, especially in Flushing. And I'm not really a New York guy, so I don't even know if that made sense, but I think it's Flushing, Queens, something like that, that borough. So many different, and here's the thing, there was a line out the door of people waiting to go try out Chinese milk tea. So I am bullish about the industry. I just don't know if Chagee is the winner once all the smoke and dust settles. Does that make sense? And you know what? I think Friday it'll be pretty quiet. So I think that just about wraps it up, friends and family. And I guess as my outro, let me just give you guys some line of sight of what's been happening. So this past week, I didn't really do much. I just bought Alti and the Misty Dip because along with the rest of the other risky speculative stocks, they were sold off. And I was like, you know what? I'm going to put my money where my mouth is. And I picked up a handful of shares of those Yield Max ETFs. And outside of the realm of stocks, I'm also still doing the marathon training. I'm trying to do the marathon before the baby is born. And I'm getting there. I think I'll be able to pull it off maybe by the end of September. I don't want to do it right now because it's so freaking hot. In Japan, I don't think you guys understand how humid and hot it is. For the first time in my life, a few years ago, in our closet, every single one of our clothes and shoes had mold all over it from just how hot and humid it is here. That's never happened to me before. And mind you, I used to live in Mississippi, Alabama, Georgia. I've lived in the South where it's just as humid, but Japan takes it to another level. So for me to run the marathon right now, I don't know if I'm going to be able to do it. And I know that I sound weak by saying that, but I think it's just me being realistic. However, in September, I think the weather does start to cool down considerably. So that's when I'll do it. And by the way, I'm not going into like a formal marathon race where I pay like $400 for a bib. I'm going to do it on my own phone and record the distance. And yeah, I don't know if I have a time in mind yet. I just want to finish because I've never done a marathon before, and I've always been a talker of like, oh, I'm going to do it, I'm going to do it. Dude, I've been saying that for like 15 years, and I've yet to run a marathon, so here I am. I'm almost ready. I know this sounds really crazy, but I don't think I've ever been in a better shape physically than I am right now. Obviously, I used to be a bodybuilder about 15 years ago, once again, maybe 17 years ago, I used to be a bodybuilder. Dude, I was jacked. So freaking expensive to maintain all that muscle mass. So when I was in the military, I slowly transitioned from having that bodybuilder body to being more efficient. And ever since I left the military, dude, my body is just such a fraction and a shell of its former self. I'm so skinny now, but my cardiovascular health is off the charts. So I feel pretty grateful about that. And I'll keep you guys in the loop. Maybe if you guys have any interest at all, maybe I can vlog that experience, right? I can record myself like, hey, I just knocked out 3 miles. We got like 4 more hours of running to go. Here we go, something like that. And I'll show you my neighborhood in Japan. I think living in Japan has its pros and cons, but I think the surrounding area is kind of beautiful, I'm not gonna lie. And by the way, I noticed that the channel has been gaining traction once again, week over week. Like the metrics are just, dude, it makes me so happy. I could cry. I've been working so freaking hard to get to a point where each upload gets dozens of comments, gets likes and engagement from people, and to finally build a community. Like, I see you guys. When you comment your usernames, I recognize you, right? You come back again and again. Dude, it makes a grown man tear up. Super happy. On the flip side of that, I've been getting an abundance and quite a lot of comments. I think it's a blessing, but I also feel terrible that I'm not able to respond to everybody in a timely manner. Because when I used to get barely 1 or 2 comments, it was so easy for me to stay on top, right? But I guess now that the channel is inherently growing, which I'm thankful and so happy about, I got to figure out a way how I can balance uploading. Because right now I'm putting all my energy into just pumping out the content. And I think I feel terrible, but on the back burner is me responding to the comments. So I promise I'm not just flat out ignoring you. It's just, it's a lot, right? And the thing is, like in the past, YouTube used to send me an email whenever I got a comment. So that was my way to stay organized, because I would just click on the star so that I could revisit it later and respond. But now YouTube got rid of that system altogether. They're trying to reduce the amount of emails that they send out, which I absolutely despise and hate, because now if someone comments, I have to only find out through their own platform and the notification system. And I'll tell you right now, it's so freaking glitchy. Like, somebody could leave a comment on my video and I'll read it, and I'll be like, I'll respond to it once I get back from my run. And I click on the notification again to try to find it, and it's gone. So I have to go to that physical video and try to find that comment and scroll. Oh, there it is, and then respond. So I'm like, as a creator, I feel kind of frustrated that YouTube is changing their notification system because their platform itself is so glitchy. So I guess there's 2 variables happening why I might not be responding in the quickest manner these days. But I know it's excuses. I'll try to be more diligent. But regardless, hey, if you made it to the end, I love you guys. I truly mean it, because you can support anybody that you want on YouTube, but here you are spending this time on this hike, farting nonstop with me. And I don't take that for granted. I appreciate you and your time. So, yeah, can't wait to do this all over again next week. If you are a regular listener of the earnings report series. With that said, dude, I genuinely mean it. I hope you have a good day. Stay safe. Good luck in the stock market. Try not to do or make emotional decisions this week. And I'll talk to you next time. See ya. Peace.